Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for December 16th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We're basically chopping around the 2257 and 2260 zone, and that's been a very important zone for us. That was where we implied before that if bulls could defend, we could squeeze into 2240 followed by 2257 to 60. We got to that zone. We thought there could be a rejection there here, but as soon as price pushed above 2260, that play was over, and instead we were left with a trading range. So over the last 5-6 trading range days, we've been basically trading just in this range, and it's a very narrow range. We can basically quantify that. So what we typically do is we go in our trading room, we bring up the ADR method here, and you can see that right now, very narrow range that's developing today. We can bring up a 5-day look back, for example, and that'll give us a 5-day average range. So over the last 5 sessions, 1, 2, 3, 4, 5, right down here, you see a magenta bar below a red dot. That tells you that prices are very, very coiled up compared to average 5-day range over the last X amount of periods. So this is a very tightly coiled range. We now can quantify that. What typically happens from there is we see very nice expansion at some point. But in this case, what I always caution is whenever you have a very tight range, one thing you want to be cautious about is the first breakout. The first breakout, for example, can oftentimes be a false move, and that can lead to a push back down. Conversely, if this thing breaks down, a false move can be seen and we could break back up. At this moment, whenever you form something like this, you test both edges of the range, and typically you lead to an expanding range. But overall, as long as price continues to hold above 2214s, this thing is still pointing up, and every pullback will still be a buying opportunity until proven otherwise. All right, let's take a look here at the intraday time frame. Here's the intraday time frame. Basically, not a whole lot going on right now. We have price chopping around the previous session's close of 59.75, and price is pushing higher and chopping around 1 and 5-day VPOC right now. The edges of the range right now, the near-term range are 67 and 53 to 50. That's the range. So if we get up into this zone, we could see a fade back. If we get down a little lower, we could see a fade back up. But right now, the edges of the range are a bit wider out. We could actually see much better activity down here near 46, 47. So if prices got down here, it could be a better buy up. And if price got into these 67s, look for a potential fade. But right now, in the middle of this area, not a whole lot to do, just mostly being patient. All right, let's take a look at crude oil. All right, here's CL. We've gotten a gap up today. So if you take a look here at the daily time frame, there we go. One thing you'll see here, we got a perfect rejection day. We got the midpoint retest. We got the digestion day. We got the stop run day. And then we got a push into 50 evens. Our final target was basically that white line right there. That was mainly the level that we were shooting for. We were shooting for the high probability gap fill, and then we were shooting for the midpoint of the range, and then we were looking for the white line, and we basically got each of these. However, once price hit 50s here, yesterday in the trading room, it became quite clear that there was absorption occurring off that zone, and we were looking for a late day squeeze. That late day squeeze materialized, and in overnight trading, we've actually pushed right back to the previous high here, and now we're seeing a nice little push up. At the moment, we know that there's significant rejection above 53s, and especially 53.40. So if price gets into that area, bears could look to defend yet again. But right now, this pullback is very important because right now the high is the previous week's high and the low is the previous week's close. That's currently the range for the day. So above the high, we'll squeeze a little higher, perhaps into 53.40, and failure to hold this low perhaps leads to another retest of lows down below. Until then, it's a fade the edges type of day. So if we translate that to the intraday here, You can see right there again, here's the previous week's close, here's the previous week's high. Right now that's the range, and the idea right now with a flat VWAP is perhaps fading the range at the edges until proven otherwise. The flow is currently to the upside, so if price were to push above these 52.40s, again the expectation would be for a push back toward 53.40, 53.45, 53.40, right in the zone. So above this high, squeezes right back to this level. But as of right now, the idea is to fade the edges until proven otherwise. Okay, let's take a look here at gold futures. Here's gold. We had a significant sell-off here, exactly what we were looking for a couple of days prior. We were looking for these responsive bulls here to fail to get paid. We were looking for bears to jump in here to run the stops below 57s, and we were looking for a fulfillment of this key range and its targets. And there it is. There's the first one, there's the second one. So we got a nice move out of that. Again, it's the same move, it's the same play that's been happening week after week over the last 5 weeks or so. It just won't stop. And right now we're forming an inside day, a digestion day after a 2-day drop. That's exactly what we've been seeing. After a 2-day drop, you typically see some sort of digestion day develop afterwards. So right now, that's kind of what you're seeing. Today could be a fade the edges type of day. It could be a very narrow range digestion day. Any pullback in a downtrending market in the upcoming week will likely be seen as a selling opportunity for further downside price discovery. If you look at this thing from a wider time frame perspective, one thing I mentioned before was 1180 was the last area. That was it. Bulls really needed to get in here and push back above 1180, because if they failed to do so, the next zone down becomes 1040 to 1060. There's nothing really here. This is the distribution. So as of right now, the fact that price failed to hold 1180 and then formed a box and was unable to trap those late bears, and instead it pushed downward, all this means is we're likely going to continue trending down till we'll see 1040 to 1060, and only then will we begin to see perhaps a bounce and a trade within the distribution. So something to keep in mind with gold. It's just not worth buying right now. Short-term intraday buys, yes, but on a swing basis, it's all been downhill. All right, let's take a look at the NQ. Here's the NQ. This one's fantastic because it's been holding on highs. It's very clear where bulls are defending. It's our 49.10. We talked about that day right here. 49.10 being very important. You can see the pullback right here being defended. Very clear line in the sand. Additionally, this all comes off of our expanding range that continues to develop in this contract. So, for example, we could trade up here in this little portion of the distribution for another several days. But if it fails to hold 49.10 at any point, up here, all of these late buyers likely get rejected there at those highs. You see the sell stops come out, and you see this thing, boom, push back down. And again, if we're going to continue on this line, we could easily fall all the way back toward 45.50 and perhaps lower. But at the very least, the high probability trade is always take it from rejection back to acceptance, and that's 48.06 to about 47.58. That's the zone right there. So this would be the high priority target. Anything left would be on trailers. All right, let's take a look right now at the intraday here. There it is. On an intraday basis, obviously we're up here near highs. We're forming a range. The range is quite clear, and we're at the center of the range at the moment. So 49.60 right here and 49.10. When price gets to 49.10 or thereabouts, it's a fade back to value, 49.39. If price gets outside of value up here, 49.60 to 49.62, that could be a fade right back to 49.38. That right now, that's the only play. As we trade between 47 and 30, everyone trades in there. So look at price activity in there. It's very difficult to trade. You got to stay away. But when price gets out here, very simple. When price gets out here, very simple, right? For the most part, it makes things easier. If price were to push through 49.60 and hold, this thing's probably going to make a move for 5,000. So above 49.60 could squeeze big after this holding pattern. But right now, the trade is to fade the edges. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck, trade well, and happy Friday.